Good morning, good afternoon, good evening, hello world. Welcome to the Charlie Shrem Show, your deep dive into the fascinating intersection of finance and technology, Bitcoin, crypto, Web3, AI, everything. We tell stories, we talk about how these things started, the people behind them, and the real juice. I am your host, Charlie Shrem, and today we're hitting the bullseye of a super hot issue everyone's talking about, the intensifying regulatory environment for crypto companies. And with the end of the current Biden administration, their moves have been crazy. There's an increasing belief that we're witnessing Operation Chokepoint 2.0 in action. We've got Coinbase and other significant players contemplating their exit from the US, and the cry for regulators and the cry for regulatory clarity from the crypto community is growing louder than ever. Today I'm excited to bring you a conversation with three incredible guests, each making waves in the banking and financial services sector of crypto. We'll hear about how the shifting regulatory landscape is influencing their operations, the stories of how they started, and we'll tap into their insights on what's next for the financial side of crypto. Our first guest, Josef J, is the leading voice in peer-to-peer lending and the co-founder and CEO of Pawn. From Switzerland, Josef is pioneering the use of digital assets to secure loans and help transform all of our illiquid assets into productive ones. Super cool. Next, we have Joshua Garcia, a seasoned advocate in the fintech space who works closely with top organizations. Next, we have Joshua Garcia, a seasoned advocate in the fintech space who works closely with top organizations in the field to help manage regulatory risk. With nearly a decade of experience, Joshua's research on open standards to measure blockchain network centralization offers us a very unique perspective. We need to know how to measure decentralization and centralization. We're always talking about this like path and road to decentralization. How do we measure that? Lastly, and last but not least, we're speaking with Seamus Rocca, CEO of Xapo Bank. You guys know Xapo. They're one of the oldest companies in the space, OG company, one of the leading Bitcoin custodians, and now a fully licensed private bank. With over 23 years of experience in the financial services sector, Seamus brings a wealth of knowledge on navigating the choppy regulatory waters in the crypto banking space. So buckle up, folks. It's going to be a fascinating journey. We're going to have some fun. Enjoy as we delve into the complex world of crypto and Bitcoin. I'm really excited to bring on the guest today, Josef J. Josef, thank you so much from Pawn, and you can check out the website at pwn.xyz. Thank you so much for coming on the show today.
Amazing, Charlie. Thank you so much for the invitation. Couldn't wait.
Okay, so you have one of these companies that I'm very jealous about because and like you sometimes brainstorm with your friends about a really cool idea and you say someone should invent this, and then like months later you found out, or years later someone did. You are that business. And I remember going back, and it's very important, and I'm going to use that as an introduction because it's very important what you do for creating not just liquidity for assets, but also for price discovery, because that leads to stability and that leads to building the economy of things on top of all these blockchains. You're the co-founder and CEO of PWN or Pawn, a permissionless peer-to-peer lending platform that's helping people turn illiquid digital assets into productive ones. Essentially, what you do is you allow anyone to uh, take out loans backed by other digital assets. So you can use NFTs like CryptoPunks, Bored Ape Yacht Clubs, and coins like Dai and Ape as collateral, and then be able to borrow against that. But also at the same time, you're allowing other people to be the liquidity providers to create the rates and be the actual lenders, and lendees at the same time. And you guys are just like a protocol in between. Um, it's so cool because uh, I just I just remember when this didn't exist, probably 2 years ago. Um, I was sitting in a meeting with one of these top exchanges, and I was saying like, you guys have an NFT wallet. You have one of the largest platforms. People are maintaining you already have your financial licenses that everything you need. Why don't you offer like lending against this? And they're like, well, it's just too complicated for doing both sides. How did you figure it out?
Well, that was a great summary, first of all. I also like to say, because there is a lot of like lending and borrowing protocols in DeFi, and there is a whole variety of like products that people or crypto natives can use today. I like to call Pawn the mortgage protocol because that's kind of our specialty. So we basically just created this permissionless protocol, as you mentioned, where you can use any standard token on EVM chains currently, but the plan is definitely to go like even deeper into the stack and going forward to deploy this to all of the chains that allow the smart contract functionality. And then also, as you mentioned, like we just like literally build the protocol so we don't act as an intermediary. And we are currently, I mean, we're just getting out of beta, so we just launched this almost a year ago in June during ETH Prague last year, and we're still in this process of discovery of like how will people actually use this and interact with this, and like what are the types of assets people will use this for. And while building it, we kind of want to keep this open mindset of like saying, hey, we shouldn't really like enforce something as like a central party here, but rather build a marketplace, if you will, or just like a platform where people can mix and match and basically like stay on this like peer-to-peer value set in crypto. And so we created this like generalized protocol where people can use like whatever they want, whatever is like compliant with the token standards. And as long as there are counterparties, as long as there are borrowers that are looking for liquidity on their assets, or lenders who would be willing to accept something as collateral, then there's no reason why these interactions like shouldn't occur. So one option would be to just like build custom contracts for all of that, or then just like use a generalized protocol.
I mean,
Um,
why do you call yourself a mortgage protocol then?
because the loans on Pawn are a bit different than what you can find like traditionally in DeFi. So first of all, like the motivation for building Pawn um, is like pretty similar to the idea of like, hey, somebody should build this. Because when we started with the project, the first trigger was essentially like me being rejected at a bank, wanting to get a regular mortgage. Because I would consider myself crypto native. I was paid in ETH, and like all of my transactions, or like a majority, including my salary, were happening on chain. And then I wouldn't be even like considered for like getting a credit score or something like this. I wouldn't, I would be completely excluded from the real estate market, just by the virtue of like being in a different asset class. And that triggered us into thinking, well, there isn't a real difference. Like it's just like real estate or like stocks, bonds and like these kinds of portfolios. It's just a different asset class, and like you can get mortgage type of loans, meaning like loans that basically vanish or disappear upon either repayment or
Yeah.
default if you like miss installments. And there is no reason why this shouldn't exist in this like new paradigm, right? Like the DeFi paradigm, where you can even like cut the parties in between, the parties doing the appraisals, the parties like doing the custody and escrows of these assets. And you don't even have to, have any like jurisdiction in between, because you can basically just implement it, let it sit in the contract, and you can automate the entire flow. And that's what Pawn is in its core. It's not like, like an automated pool where you basically just try to take like a fee on people getting into positions where in like high liquidity seasons they can get like easily liquidated. But it's more similar to how regular mortgages work. I mean, they don't really take into account like some sort of like volatility of those assets during the term. So there's definitely like a bit more exposure for the lender to make wrong bets, which currently in DeFi you don't have. Like in DeFi, you're like fully covered if you don't consider the systemic risk. You're fully covered because like your positions will be secured by the liquidation mechanism, which just makes you basically degen into whatever protocol there is and just like
Yeah.
pour your money into it. And then as borrower, if there is like a 1 day dip, you're screwed. You just like lost your life savings. And this kind of still puts the entire DeFi and crypto into the casino narrative, and we want to change it. So we
Ah.
wanted to build something that lasts longer, and the loans on pawn therefore work in this setup where like you either repay them and you get custody of the collateral, or if you miss the payments and in the near future, if you miss the installments, then the collateral will be auctioned, and then there's some sort of a procedure. But you shouldn't be exposed to this volatility. You shouldn't be exposed to the ride and like the chance of, by just like missing a dip and forgetting about your CDP and like the MakerDAOs and or your Avalon. You shouldn't be exposed to losing something that you want to potentially keep for like the next 5, 10, or 15 years.
This is really cool, and I like the narrative that you're saying because that's the biggest problem with these like flash type loans or these loans where you can have automatic liquidation events. That's what caused things like almost you had like the Terra Luna collapses, but you also prevent people from being able to say to you, well, aren't people like just putting up money as collateral, borrowing money, then rehypothecating that money, and you're just like rehypothecating the same money over and over and over again. But you saw a lot of this happen, so you're not like you started this company in a hackathon, but you have a background working at the Ethereum Foundation, so you kind of like saw the problems that happened with the lending market during the DeFi spring that led to I guess this bear market that we got into.
Yeah, I mean, like, basically, like sit through that, just like keeping my hands tied and just like focusing on my day-to-day work. And it was like being through like several like market cycles since like 2011. Like you see a lot of people like come and go, and you see the different characters in crypto as the
Yeah, I
industry.
agree.
And uh I understand like why, and even just like talking to my family and friends and like explaining crypto and being the annoying guy that like talks about crypto all the time. Like I get why people are skeptical of the industry, because there's definitely a lot of like shady stuff and a lot of like unfilled promises. um and like to me, the way to kind of like change the narrative is to start working on something which I believe like has the long-term potential and
Okay.
actually like fits into the future where I want to see crypto to go.
So I see. So you've built this system where the terms are fixed for the entire loan's duration, and so the borrower doesn't need to worry about the fluctuations of the collateral, and all that matters is that you pay back the loan before it expires. So in that situation, how do you prevent? How do you prevent the situation where for a very long time, a person's underwater on their mortgage, like the value of the collateral goes below what the value, the still the initial principal of the loan. But I guess you can offer some type of insurance and then put that insurance into like a liquidity pool and then offer people the ability to like contribute to that and then by earning some of that profit, or you can just make sure your due diligence is really, really good
Yeah,
against the person
exactly.
itself. You're not just lending against the collateral, you're lending against the due diligence of the person.
Exactly. I mean, it's so first of all, because like now the lenders have like higher exposure. Like if they pick collateral which is complete nonsense, um, then I mean, they're there to blame. And I'm not saying we're trying to like create like a unsecured market from that perspective, but I feel like it ties to the appraisal process. So currently, what we are seeing in terms of the deals like happening in kind of the NFT markets or kind of the long tail of assets in crypto in general, like these terms are usually, and to be kind of realistic, right? Like these terms are between like 20 to maybe 40% loan to value, which is, I mean, you could say, well, it's nowhere near like a mortgage case where you'd have like 80% loan to value or something of that sort. But they're super early. I mean, like what we see in similar types of loans in terms of like stocks, which are also like super volatile, but the tools for appraising them are there, right? This is like long-standing industry. Um, like those terms are around like 70%, 80, like 100% in case of like bonds and these types of like assets. And I'm a believer in crypto. I think the tooling to get these appraisals right will get there eventually. So right now we're kind of still in this like high risk situations where the terms for the borrowers like aren't super amazing, but they have the optionality. And in my opinion, like, in the next like 3 to 5 years, that will tremendously improve because like there will be a variety of assets that already now, like you have assets that we are talking about is like blue chips, right? Like let that be
Yeah,
NFTs or like even DAO tokens. And like there's a lot of projects focusing just on the appraisal of these. But down the line, like what I think it's inevitable, it's like uh the real world assets like becoming like tokenized or having the now paper-based derivatives and that kind of stuff to actually be like tokenized on chain as well. And boom, like then you can just like take those as a new asset class and use exactly the same system, exactly the same protocol. So in my opinion, the securities for or the assurances for like having more sensible terms will only improve from now on. And again, I'm not saying that's the case for all of the assets. There's obviously a lot of like junk lying around.
sure.
Um, but
Yeah.
I think there is a still wide spectrum of assets where this makes complete sense and where people will be willing to take like 5 year or 10 year exposure to those assets.
So how do you I was going to ask you how do you price them, but I'm just looking through some of the loans here. How do you what will be the first non-digital asset that you guys will you ever try to do like, physical assets like properties,
So
for example, or something
so
like that?
so so the focus of Pawn is to basically like be the protocol for the assets that are already tokenized. So like we ourselves like wouldn't go and try to build like a
That's
um
smart because yeah,
so
other people are doing that.
yeah, and also like again, we work on off the thesis that like these assets will come eventually. In terms of the appraisals, and that's where we already like touched like subjects as like compliance and so on. Like we really act as a marketplace. So we are aggregating data with the appraisals. Like if you go to some of the asset pages currently available for most like blue chip NFTs, we basically aggregate data from variety of providers, including some of the market data on like OpenSea and Looksrare and so on. And we give the option to like both sides of the table to say like, hey, how much this asset is like worth to you. And again, there is a spectrum of cases. So like if you're a collector who would be willing to like keep that asset, they definitely provide like better terms than just like someone who is looking to just lend money with like a greater certainty of returns.
This is a very, very, very cool protocol. And I think you're going to be highly, highly successful because you're going to see a lot of other type of companies offer the ability to that are going to say, "Hey, what we do is we help you tokenize your physical asset." And then they're going to offer your protocol as the protocol where you can go and then borrow against it. And you can have a relationship with those companies too. I think I saw there's a company 4k.com that I can take like I have old physical bitcoins, the Casacious coins or whatever. You can send it to them in the mail and they will insure them and then hold on to them and they're safe, but issue you an ERC20 token. That's for the value of the coin, and then I could potentially go here and borrow against it. So you're borrowing against a physical Bitcoin.
Yeah, exactly. And like we actually talked to several companies that are doing similar things for like collectible items. There are some companies working on this for real estate. Obviously, I mean, if you
Mm.
start like talking about tokenized like real world assets, like you definitely get deeper into the question of like trust and like trust to these providers because like then you start involving centralized entities. But it doesn't change the function of the protocol. I mean, the protocol still can like match people from like different backgrounds and expectations. So it can work like completely, in a DeFi way where you basically just consider the decentralized assets or the ones that are like fully living on chain, and then you have all of the certainties that the on-chain transparency provides. Or if you're interested in like these types of deals, you can do it as well. Like you can even and there's a variety of features. I mean, it's mentioned we just started. There's a variety of features that we are working on, like including um, some sort of credit scoring, which is completely optional. Like we don't want to
So cool.
enforce this on someone. Like we don't want to do the KYC for like all of the stuff that happens. But there's also not a reason why the protocol shouldn't be functional for like assets that require KYC whitelist and that kind of stuff. Because still, it just like lives on chain. Like anyone can use it, and if you can provide a compliant asset that just like will work with the protocol, then use it.
Joseph, thank you so much for your time and coming on the show today and teaching us about how we can all, you know, I just want to ask you before we end the show, why do you think this is important?
Um, it's a perfect question to finish with. Like I think this is the protocol, and like building things like this, it just creates the optionality. I mean, it
Mm,
it creates something that the new generation that like uses these sort of like digital assets as like normal things can have access to the same like financial service as the rest of the world with the real world ones. So for me, this is just like basically creating one of the components. And it was inevitable. If we didn't create it, so like someone else would.
yeah,
Um,
exactly.
yeah.
Thank you, man. I really appreciate you taking the time today.
Well, thank you as well, Charlie. Looking forward to hear more of your episodes. Thanks so much again for inviting us and letting us to spread the mission of Bond. And yeah, hope to see you soon somewhere.
And I'm very excited to introduce my guest today, Joshua Garcia. Josh, thank you so much for coming on the show today.
Yeah, thank you for having me.
You're
Happy to
out
be
there
here.
at Consensus, of course. It's my honor, and on behalf of the listeners, thank you for taking the time out of your schedule. You're at Consensus right now in Austin. There's a lot going on. Yeah, you were just telling me that it's nice being there because you were saying that you're getting all the lawyers together. You guys only see each other a couple of times a year.
That's right. A lot of lawyers work remotely these days. You know, it's a post-COVID world, and we relish the opportunity to kind of get together, complain about all the regulatory issues that are going on, come up with interesting, legal hacks, and just enjoy the like the camaraderie of the struggle, right? Because it is a bit of a struggle to advise clients in a really tricky, uncertain regulatory environment. It takes a toll, and you want to complain about it. So we do a lot of complaining about the regulators at these conferences.
Regular complaining though because we want good results. Your company is consulting company. Is it Ketsal or Ketsal?
Ketsal.
Oh, Ketsal, very nice. You work closely with developers, funds, exchanges, NFT platforms, investors, anyone in the space. You focus on helping them create like a sound crypto policy for whatever they're trying to do. But on the other side, you also work with top international law firms. You've been featured on at Coin Center, Bitcoin Magazine, CoinDesk, and at the same time, you've been able to present at the Money Transmitter Regulators Association, the New York City Bar Association. It's nice to like you get to talk to both sides, and at the same time, I feel like most of the time, people on both sides are just like folks like you and I. At what point did regulations become so political?
I think they're inherently political. Sometimes they're not politicized because we don't understand their effect on us. For instance,
Oh,
Coin Center right now did a filing for what could be, an obscure tax rule, but they're seeking clarity from the IRS. They want the rule to be different, and I believe they're engaged in some legal process to make that the case. But this tax rule, a lot of folks just don't understand how tax works, how the IRS works, and my understanding of this rule, I'm not a tax attorney,
sure.
is if the IRS gets its way, then peer-to-peer transactions over $10,000, if I send you funds over crypto rails, then I'll need to know your social security number, or I'll need to know personal information about you in order to make a filing with the IRS. if I have that understanding right, that's not a great thing, but it's not being politicized, right? I think it's not being politicized because it's a bit of like a deep in the weeds tax rule,
Yeah, good point.
but I think it is political. It's very political. The idea that if I want to send a friend of mine a decent amount of money, that I have to get their private personal information in order to do so, and then report that to the government. That's a political issue.
The
So,
onus on it was always on the financial institution to collect that type of information.
right, and that's why this rule is kind of a weird, wonky rule. Yeah.
Like,
Um, I
yeah.
I I wish I knew. I wish I'd read up on the rule more. Last time I looked at this was like 8 months ago. But it is a strange outcome. It is a strange rule. Coin Center has, I think, published their filing on their website for those curious to take a look at it.
Do you think there's still is there you think this whole Operation Choke Point is like some sort of real memo that was put out by some top level politicians out there to like actually, choke out crypto companies and Bitcoin folks from our bank accounts? Is it more of like just a mixture of it actually happening and then the media kind of making it worse than it is?
I am not sure. What I'll say is I'd be surprised if any government administration was this coordinated and this
That's
targeted,
what everybody
right?
is true.
There's been in the banking sector, in the security sector, in the commodities world, there's been a lot of bubbling for years, right? None of the FDIC's moves or the SEC's moves are really like, all that surprising given the past few years of their interest and intensifying curiosity and concern about the space. So it could be a lot of siloed interests coming to a head at once. It could be maybe there's a piece of paper somewhere, but if there's a piece of paper somewhere, remember when we talked about Operation Choke Point, we mentioned 2.0, right? So there was a 1.0 where the government was at the end of that Operation Choke Point 1.0, the government was sued, right, or investigated. They did an investigation into DOJ attorneys to see if there's any wrongdoing there. And they were cleared. After the investigation, they said, you know what, the attorneys acted properly at the DOJ in asking for the FOREA subpoenas. And so Operation 1.0 is where you learn, if this is 2.0, it's where you learn your mistakes. And if one of the mistakes is, we had emails
Yeah.
back and forth at the DOJ, they're not going to write anything down, So if if they're pulling lessons from the first go around, then they're not going to have something on paper probably.
What's their goal though? Is it because you're not going to kill? The world is a big place, and there's a lot of other countries that are welcoming Bitcoin and crypto companies. So, like, I mean, what's the goal? Why kick everything offshore? I don't understand.
I ask the same question once a week. I ask it
To yourself? Yeah.
no, to attorneys. I ask to myself. I sit and I think, and part of it's my job, and I don't have any good answers for that. I really, I think one thing I've learned in the exploration of what it could be is for Liz Warren, for example, I don't think any constituents in Massachusetts are really going to be upset that she's going after crypto. I don't think she's really like kind of diminishing her personal base in Massachusetts by taking an anti-crypto stance.
No,
I don't understand the logic of it, but I think it doesn't hurt her.
because those small little districts that she represents and all these other like gladiator, politicians do. Like we have them here in Florida too. We have this like guy Spencer Roach. He represents like some no-name county here in Florida, and he just comes up with the craziest type of laws that never get passed, but just to rile up the base and everything. And it doesn't hurt his image because the people that he's representing out in that county, they got nothing else better going on.
Yeah, and maybe I'm watching too much Succession, but
No, it's a great show.
It feels like entertainment, right? Politics feels like a little bit like entertainment. You have to stay top of mind for your constituents.
Yeah.
You have to make sure they feel like they're looking out for you. politicking in the dark is a way to maybe not get reelected. So I don't, but I'm not a politician. I don't know what motivates them. I I try to focus on what the rules are and how to help folks work with them as they are.
So I get how you can help with the banking side of things, and there's that whole segment. And moving on to like the securities side of things,
Mhm.
imagine a world where all crypto companies can and tokens can fall into compliance because the rules around accreditation, accredited investor, have been changed. Do you think then that would move the needle? Because I read something this morning that they're trying to add, the SEC is trying to add some new changes to the SEC rule, to the accredited investor rules, allowing for like um there to be a test, and if you can prove that you're a qualified individual, then you could essentially buy, a security or a private placement, and maybe down the road securities tokens.
I like this rule. I like that the SEC is looking to change this rule, and I think that it doesn't solve the problem for the crypto industry. What it might solve is more people can get into ICOs in the US, but I don't think it solves the fact that you have to register pretty if you're a crypto company now, in all likelihood, you're gonna feel like you have to register your ICO with the SEC.
And you mean like ICO is like the term that was coined in like
Yeah,
2016,
yeah.
when, back in the days when you can just like send money to an Ethereum address and it would spit you back out these tokens. I mean, those were crazy days. But nowadays, these are these are companies that want to launch like actual like tokenized equity and revenue sharing tokens, where like you hold the token and you get a piece of the revenue of whatever the business is. I mean, these are real great businesses and products and services. I mean, you could revolutionize that. The private the private placement market in real estate is only like $8 billion. If we could move that just into crypto, that would make a huge difference in our industry. But the problem is that liquidity is siloed, and and most of that liquidity is going to exist on like decentralized exchanges and all these other places. No one can register for a securities token exchange because 99% of us are not accredited investors, because you need to have like millions and millions of dollars in the bank or something like that.
Yeah, a credit, it's not that high of a standard. You need 1 million in the bank, or
Okay,
you need
who has a
you
million
need
dollars in the bank? Like,
that's
we're talking
that's fair.
about,
Yeah, yeah.
we want
No.
to crypto is for everyone. Like that's the whole point.
Well, if a crypto offering is a clear securities offering, it's not for everyone, right? It's like, crypto pulling in regulated financial instruments. Like, let's say, we have
Yeah.
a crypto platform that just lets people do complex derivatives. That's not, it's still crypto, but it's not for everyone, and it's still going to be highly regulated. So, you know, the 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 fact that folks can maybe point to a wallet in the future and say, look, my million is in USDC, not in a bank account, or take a test, I think is a good thing. But it doesn't have really anything to do with fixing the fact that uh, some crypto is going to lapse into a highly regulated world. That's going to close the doors for a lot of folks who might be interested and curious about it, but
Yeah.
because they're in the US, they get shut out. That's always going to be a problem. But that problem is global, right? That is not just a US problem. If I'm in Australia, ASIC, the Australian Securities regulator, they have rules around, who can participate in securities offerings or complex
And there's
derivatives.
a does this European MiCA rule cover it too?
No, no, it doesn't cover securities issues. It purely covers like a lot of the payments and other rules.
So there is no solution then, because as far as we're concerned, crypto is always going to fall under securities regulations. And I guess my view is that there are cryptos that are securities, there are cryptos that are commodities, there are cryptos that we don't know how to categorize. And so like how do you create an umbrella regulation to let people know when they embark on a journey to start a company
Yeah.
where they fall in the, you know, in that bucket?
Yeah. Step one is taxonomy. That's what Europe did. First, they said let's determine a common taxonomy for how to categorize these assets. We haven't done that in the US. You know, there people have tried to pass taxonomy bills, but we're wedging cryptocurrency into language written 80 years ago right now in various laws, right? Like the definition of income from
Sure.
under the law, tax law, the definition of money transmitter, the definition of security, definition of commodity. We're just wedging crypto into these definitions. We're not determining a taxonomy. Until we do that, then we won't be able to really categorize one project versus another project and give people certainty. But I think taxonomy is the first step.
What's what like tell me what the first step would be there. Like how do you, what are we trying to categorize? Like the people, the tokens themselves, the different, like we're just breaking down the different classifications of like what a smart contract is. Like how deep do we need to get?
Yeah, and this is a difficult part because you ask an engineer like who knows Solidity how to categorize different tokens, and they'll give you numbers. They'll say 721, 20,
Yeah.
But
Yes.
if you ask a lawyer, they're not going to give you numbers. If you ask a regulator,
That's funny.
so there's a massive disconnect between how the engineers think about this and how the lawyers and regulators think about this. And all of the taxonomy projects that I've seen involve 15 to 20 people in a room trying to figure this out. And
Yeah.
they all have different starting places, and it leads to contention. Some people want to start with, is this like meant for, what's the purpose of this thing? Is it meant for payments? Is it meant for investment? Is it meant for pure consumer use? Like by consumer use, I mean, like, is it a token that's going to extinguish when I use it, like a ticket for a train or an event or something like that? So it's a tough problem,
Yeah.
but it requires people sitting in a room engaging with regulators, and there's a blocker there, right? We can't do that. We've tried over many years now
Right.
to talk to regulators, and it's not that easy to get real progress.
A lot of people are saying though, like, and even in my intro, I said the Biden administration, but that administration has only been for like a couple of years, and this problem has been going on for a decade. I mean, I'll tell you, in 2011, when I started BitInstant, I was getting kicked out of bank accounts left and right. This is not a new problem, so it's not a political one. We can't wait for the next administration and pray that they'll be better. What needs to happen?
So what is happening now is I think what needs to happen. People are still building. We're still getting clients coming in with really interesting, innovative projects. It's still an industry that's iterating on its, like, its mistakes and its gaps, and it's very much alive and kicking. And I think all that needs to happen is it needs to stay alive and kicking. And I think it will, because if you think of all the talent that went from like a Goldman Sachs or like a big four accounting firm into crypto in 2017, 2018, 2019, are those people going to go back? You know,
Yeah,
once you like get bitten by the bug, you stay in it
you're
for,
staying in it
yeah,
or
it's
figure it
hard.
out.
It's really hard to go back. Yeah.
So you get, my listeners are like startup founders themselves. We got entrepreneurs, we got CEOs of Web 2 businesses that want to come into Web 3 and get involved. Like, how do your first meetings go? You guys are like a full service consulting and advisory firm, helping all these different companies come into compliance. Like, what question do you ask first when you meet a new project that could potentially go through your pipe? Like, do you have a system? How do you break down these
Yeah.
projects?
I like to do immediately kind of a deep dive into the funds flow and the technology. So if they're issuing any kind of a token, I like to understand right at the outset, how's the money getting to you and what value are you giving out, and who are the organizations involved in that. And if there's a smart contract involved, I always ask about, right now, who can change it, who can administer, who's going to deploy it. and how in the future, how much control do people have over elements of that smart contract? And I think asking those questions gets very testy sometimes, because a lot of startups will have marketing that says we're decentralized or we plan to be decentralized. But when you ask those kinds of questions, it's like, oh, okay, Joe has the freaking codes to the the admin key to the smart contract, and he can move funds. He can move funds around, really? Okay, that's good to know, right? So and what's nice is you have to tell your lawyer these things. So there is a function in the U.S. legal system, right, where we have attorney-client privilege. People feel like they can tell us things, and they don't have to worry about that information getting out. And the sanctity of that allows me to get that information from people and have honest and open conversations about compliance, and that's why I like to start there.
You become like a therapist for some of these people too, probably.
Oh my goodness, yes. We we don't have to get into that, but yeah.
No,
I'm a bit of a people pleaser, so I don't mind that too much, but some lawyers just kind of, they roll their eyes at it.
Yeah, no, I get it because it's one of these things, but that's part of the job because no one knows what they're doing. The problem is I don't like doing anything where I don't know what I don't know. And it seems like more and more I don't like that I'm learning too much. I'm learning so many new things. And it's like a little bit scary because it's just like how much more did I not know about? And then you're like you have to take a step back. So you're probably like these people build up this marketing, and we talk on the show a lot about the path to decentralization and the path to immutability. So it's totally cool if it's not going to be immutable on day one, or it's not going to be fully decentralized on day one. But what you're saying is their marketing and their roadmap and their disclosures have to be honest about that.
Yeah, I'm a big advocate for either keeping your mouth shut or just saying what's true. And a lot of the times it boils down to, just don't say anything until you're ready. A lot of people overpromise in this industry, and that's a problem. It can really get you into trouble.
True story. True story. Well, you've definitely given us a lot to think about today, and thank you for speaking now and giving us all this information. I just want to, because I know the listeners are going to be very interested. Your website is ketsal.com.
That's
And
right.
they can follow you on Twitter at same at Ketsal, and we'll have it in all the show notes. Josh Garcia, thank you so much for coming on the show today. Um, very, 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 very interesting. You gave me a lot of food for thought on this topic that we're following through this 2023 year. Thank you.
Yeah, thank you, Charlie. Thanks for having me. Take care.
We're joined by a new friend of mine, Seamus Rocca. You're the CEO of Xapo Bank. Thank you so much for coming on the show today.
Thanks for having me, Charlie.
So speaking of the Rock, you are a true Gibraltarian. You're from Gibraltar. You don't meet you don't meet a lot of people. It's like you're almost like a tourist attraction in and of itself.
Yeah, I always joke that there's 30,000 Gibraltarians, and I always say to people, when you meet a Gibraltarian, it's like winning the lottery. In fact, you probably have a higher probability of winning the lottery when you buy a ticket than of meeting a Gibraltarian. 30,000 out of 8 billion.
Yeah.
But there's not many of us. So yeah, I was born and bred here, and spent the last 30 years working, traveling around the world, and Xapo brought me back home. So I've been living here for the last 2.
You've like held various banking positions in different places of the world. I see from like Standard Chartered and Credit Suisse in different places, which is you sat in the financial center of Europe, arguably the world in London. You worked in New York. Now you're back in Gibraltar, sitting there, right, like kind of like at the epicenter of the crypto world right now. I want to understand, before I ask my questions, Xapo you guys are a bank. Where do you operate? Can Americans have accounts? What's the status right now?
Sure. So we are a bank based here in Gibraltar. So we have 2 regulated entities. We've got a bank and a VASP and essentially when you join to Xapo Bank, in the account itself and the app on your phone, we mix those 2 services together. So to you, it feels seamless. But that's how essentially we allow you to have, crypto and banking services all into one. So we essentially serve the world from here, from Gibraltar, except the US. So we used to have a business in the US. It was mostly institutional focused. And we found that our value proposition of having a dollar bank account with Bitcoin was something that resonated a lot more in emerging markets in particular. So Latin America, Africa, Asia. Whereas, in the US, it was very difficult for us to compete versus, local US banks and local exchanges. So we decided that, we would pivot and become this, offshore bank. And it's an offshore bank that can serve the whole world, except the US. And it just happens to be a bank that has a savings account that pays you 4%, but also has a Bitcoin wallet that pays you 1%. So we bring those things together.
This makes no sense to me. Here you have like highly regulated, amazing products that offer like great value proposition to customers all over the world by an OG company. It's founded, I think, like 10 years ago. You guys are probably
10
celebrating
years ago, yeah.
your 10-year anniversary now in the space. And it's like the United States has become this carve out. And it's just so confusing to me because here I am, like, I've been podcasting for 4 years. I've been in this space forever. Wences, the founder of the company, was like my big brother because he was like helping guide the early Bitcoin community, which were filled with like kids. And I just going back in my early emails, just inviting us, the New York Bitcoin community, to like dinners and stuff like that, and getting things together. When I tried to launch a Bitcoin debit card, and my letting the press know early was its ultimate failure of the product because MasterCard didn't end up wanting to do it. But like he gave some pointers on that, and then all of a sudden, like I open up the newspaper here every day in the U.S. and it's like, of course, we have all these banking failures. People are still a bit afraid keeping their money in these smaller banks, but then you got the rest of the world embracing it in such a beautiful way. There's so many good things happening. It's like, where did what is going on?
Yeah, I think our experience in the US when we had the business was, you had to go to every state to get an MTL license. Then the crypto space was just starting to get regulated. We had a bit license in New York State, and if you
guys
were,
gave it up?
yeah,
Oh my God.
because Charlie, if you serve the US, you can't focus on anything else because it's basically the United States being
Sure.
lots of different states, and every state is regulated differently, and therefore to run a business there, financial services, is you need a huge amount of capital. It's complex, and bringing it all together in the early days of crypto is just really hard. And we said to ourselves, look, the world is a big place. We're better off trying to serve the rest of the world and just carve out the US. And that was a decision that we already made about 3 years ago. And then of late, the sort of the nature of the conversation seems to have shifted. The government there seems to have gone quite anti crypto, and I think it's short sighted, is my personal view. I think nobody, after the 2007 financial crisis where Lehman's and Bear Stearns crashed, nobody decided that they were ever going to use a bank again. Right, it's a financial service that we need. It just needed more regulation and more oversight, right? And FTX happened, and I think regulators have got worried, got concerned, but they've decided to shut down crypto. And it's a bit like, well, it's almost like saying that every bank out there is badly run and you shouldn't touch it. I think it's very short-sighted.
And then they tried to blame those other bank failures on the fact that they bank crypto businesses and stuff like that.
Yeah, exactly. When you look at the failings of the balance sheet and of course interest rates going up, and a lot of banks just weren't ready for that. It's got absolutely nothing to do with crypto. So look, it is what it is. It is unfortunate for the US though, because I think that other countries are going to capitalize from it. You look at Hong Kong; they've just announced the fact that they're opening up crypto again to retail
Yeah, I'm
customers.
totally caught off guard by that one.
Yeah, well, I think, look, Hong Kong is essentially the offshore arm of China, isn't it? And it's their sort of window to the world. Hong Kong is very well placed to become a very strong powerhouse in the crypto space. And again, what that's going to do, it's a massively missed opportunity for the US who could have easily run the crypto space. Why? Because despite all the noise about debt ceiling and what have you, Charlie, the US and particularly the dollar will remain the dominant currency of the world, particularly around trade for the foreseeable future. So dominating crypto as well would have made perfect sense. So, but look, it is what it is.
From like a law enforcement perspective, though, from the act, like I want to get down into it. Like, what do we care about? We care about like fighting crime. We care about like
Mm.
stopping really bad people from really doing really bad things, whether it's the dollar or with Bitcoin or a cryptocurrency. From a law enforcement perspective, isn't it easier to work with onshore companies than to like be sending subpoenas out all over the world to these like companies that you hope are regulated in a similar way? Like it's just they're making their job harder. It doesn't make sense to me.
Well, I think, look, there's on the one hand, you've got to create an environment where people openly want to work with you as a regulator. So, the 2008 financial crisis is a good example. Banks had no choice but to work with the regulator because they needed liquidity. So therefore, people would come to the government and say, I need to borrow money. Well, if you want to borrow money, these are the new controls and rules and regulations that need to be in place, right? And that makes perfect sense. So I think in the crypto space, after FTX, it was an opportunity for those of us in the crypto space who are mature players, want to do things the right way. And you said it yourself, Xapo has been in the space for 10 years. So, we've always thought regulation, sought to do things the right way. It was an opportunity to sort of develop the space, make it more regulated, make sure that all the touch points that the customers are engaging with, treat them fairly, that we got enough capital, in the same way as a bank would, right?
Sure.
So that's what we're trying to do. We deal on the crypto side, the VAS. We basically apply the same laws and regulations as we do for the bank because it's still financial services. And even though the crypto regulation might not be exactly the same, I think from the point of view of being fair to the customer, you owe it to the customer to keep
Sure.
their funds safe. So how can the regulators make sure that they create an environment where people actually want to go and work with them? Whereas now they've created this environment where people are scared of the regulator, that if you touch crypto, they're going to come and smack you on the head. So it's basically they pushed it back years.
You guys work except not just like regular bank style,
Mhm.
wire transfers and ACH and things like that, but you also work with Bitcoin and crypto deposits and withdrawals. Also Lightning, how's that working? Do you see like a future where all financial institutions are using Lightning and then you could kind of connect that through?
Well, I think right now the use case for Lightning is more around speed and saving costs. So for the people who know in the crypto space, Lightning is something that gets everybody very excited, and rightly so. But I think adoption and use cases are still and it's still in its infancy. But I think that over time, I see a world where Bitcoin becomes somewhat of a multinational currency, and therefore you can move money around using Bitcoin as a denomination. And therefore, from that perspective, as you increase transaction volumes, you need technology like Lightning to be able to facilitate it. So I think for me, what excites me about Lightning and all sorts of innovation around Bitcoin and the Bitcoin protocol is that it creates this space where intelligent, smart people can innovate on top of that Bitcoin protocol. And I think that
That's
there are
key.
use cases in the future that you and I won't even have thought about today. In the same way as who would have predicted in 1998 that all of your shopping would be done online via Amazon, So I think it's going to be a little bit the same with Lightning and some of the future use cases. For us today, the important thing was for people in the crypto space to realize that we're neither a traditional bank nor an exchange. We're in that sweet spot in the middle where you get a deposit guaranteed bank account earning dollars. We're not staking the money or whatever.
Sure.
Your money is in US treasuries and money market accounts earning your real money. But this is an account where if you send me Tether or USDC, I know how to handle crypto. So I buy it off you and convert it into your dollar account for you. So essentially, as far as you're concerned, you can use a stable coin to replace ACH and Swift because it's much cheaper, much faster. So, Lightning is a little bit the same. We can use Lightning and say, hey, you can make a payment, but we're also going to add the facility for you to be able to send us Bitcoin through Lightning. And then you can decide, well, does it go into the Bitcoin account? But if you want, on the fly, you can send it into your dollar account and vice versa. So it creates a great opportunity for us to be able to innovate
Yeah.
with our product.
It allows people to create like multinational business at the same time without having to like have multiple type of accounts, but also a lot of times you're sending like individual vendor payments using crypto, but sometimes you're also getting paid in dollars. There's a whole thing.
Yeah.
But how else do you help grow people's wealth?
Well, you know, if you think about what Xapo is at its core, we started off as a Bitcoin custodian, just helping people keep their assets safe, right? But then we kind of wanted to grow that and say, look, we're a savings proposition. Well, a savings proposition would mean that you need to earn interest. So the way that we do it is saying, okay, if you're outside of the US, having a dollar bank account is something of value. If you're in the US, you take it for granted that you can have a dollar bank account. If you're in Nigeria, Lebanon, Argentina, South Africa, anywhere where you're worried about country risk, you're worried about
Yep.
macroeconomic environment and inflation, having a dollar bank account is a luxury. It's
Oh, every
something that
Argentinian is probably really excited about. Wentz, yeah,
exactly.
that's where his whole background is
That's
from, right?
exactly right, and he lived it himself personally, right? And that's what motivated him to, and made it so exciting for him to get involved in Bitcoin because Bitcoin is a store of value. So from that perspective, we offer a savings proposition where your store of value can be a dollar bank account that pays you 4.1% interest, or a Bitcoin account which is in the safest custodian in the world, but also happens to pay you 1%. So from that perspective, you got this savings account. And through that interest, you can grow your wealth. So
Cool.
we see ourselves as a secondary wallet. People will already have primary bank accounts for their local currencies, but if you want to keep $10,000, $20,000 somewhere safe, somewhere where we don't do mortgage lending, we don't do crazy stuff with the balance sheet, we just invest it very safely, securely. It's safe because it's deposit guaranteed. It's safe because we're a bank. It's safe in every possible sense of that word, safe. You can trust us with your money. Um, it's a great way to grow your wealth.
That sounds like a lot of fun though to be able to work in financial services and Bitcoin at the same time. Do you go to a lot of events?
I try not to. I think, you know, I I've always been of the view that you got to let the product speak for itself.
Sure.
And when it comes to events, there's always a lot of hoo-ha about this new. If it's a crypto event, there's always a lot of hoo-ha about the latest coin or
Yeah.
technology coming out. And if you go to a financial services, a more financial services event, then not so much now. It's changed, but a few years ago, it was almost like I was treated like a criminal, just because I mentioned the word Bitcoin or crypto. So that's certainly changed in the last few years, especially when Bitcoin went to 65,000.
Yeah.
It was hard to ignore it
Yeah, my
as an
popularity
asset class.
changes with the Bitcoin price.
I bet it does, right? So with events, I try not to, if I'm perfectly honest. But I think now that we're trying to grow the company, we want to make sure people know that we exist, right?
Yeah.
We got to get out there and be a bit more visible.
Yeah, it's kind of cool like building a business where it's like you're the rest of the world. It's like
Yeah,
not the US, it's the rest of the world. You're seeing what else everyone's doing. When I go over to Europe, I'm here in Florida now and I just came back from Europe. When I go over to Europe, it reminds me that everyone needs to travel a lot more because it's very easy to like get into the place where we live and like the bubble that we live in and the way that we think and things like that. It's very
yeah.
important to travel.
Well, I think that's for me, one of the best use cases for Zappa, right? So I left Gibraltar when I was 18, traveled around the world, and every time I moved, I needed a new bank account. I think I've got something like 7 bank accounts around the
Yeah.
world, right?
Oh my God.
And then you've got this idea that now, especially post-COVID, remote work has become normal. People demanding remote work and be able to moving around.
Yeah.
And depending on your family heritage or circumstance, people find visas or different. I've got multiple passports or whatever. So we live in a world that's much more global, much easier for people to travel around. People can work remotely and therefore work from anywhere. And for financial services, if you think about it, it's still very tied down to your location and where you live,
Yep.
right? And we're trying to change that. We're trying to say, look, we're this offshore bank account. where anybody from anywhere can open an account here. And you don't need to move that bank account when you move. Your bank account sort of follows you around digitally. So you could be living in Brazil because you like the beach, working for a European fintech, and you get paid in euros. You can receive those euros into your dollar Xapo bank account, earn your 4.1%, have your card, spend your money. If you want to buy Bitcoin or not, it's up to you. Or the other way around, you could get paid in Bitcoin
Yeah.
and have it in this account. And therefore, every time you decide to move, if you're a digital nomad, you don't need to change bank accounts. Or if you get paid in you want to move money around in a different currency, it just makes your life a lot easier. And I think we're going to see more of that. This idea of banks need to be fixed to your jurisdiction where you live.
Yeah.
I don't see how that works in a global world.
No, you're right. And as it grows, as crypto grows, and this whole nomadic world grows too, it allows us. I'm looking at it from like an investment perspective. Like, excuse me, my friend and I in Austria, we want to like renovate some old buildings and turn them into rental apartments. But he's Austrian and I'm American. So first we have to like split with a bunch of other people who live all over the world too, split how we're gonna like fund the account to pay for renovations. And then when the rental comes in euros, how do we actually eventually split that out? It's like it creates a whole multiple accounting process, but with it seems like with Xapo Bank, it would just be all in one product in the accounting for everything. The accounting would just be a lot easier.
Well, I think doing business accounts is something that maybe is in the future roadmap. At the moment, we're much more focused on retail, but it's a similar principle. That this idea of even though you're American, you're looking at business propositions in Europe and doing stuff there and what have you. It's much harder to do that 20 years ago. Now it's
Yeah.
super easy. We've got a different perspective of the world being much more global, digital, and what have you. And if you think about what do we love about Bitcoin, we love the fact that it's sovereign, no government controls it, and therefore that it's finite, that it's secure. And it's a great store of value. It lives on the internet, so to speak. There is no one country where you go, I've got Bitcoin in country X. The touch point to the Bitcoin might be regulated in a country,
right.
but Bitcoin is sort of this, it's digital. Well, we tried to mirror that, because we were born as a Bitcoin custodian, said, well, what's the next best thing or the equivalent of that in the financial services world? Well, if you have an offshore account, it doesn't matter where you live, right? And if you have dollars, it's by far the sort of strongest, most versatile currency in the world, most widely used. So people outside of the US value having a dollar account, maybe not so much in Europe, maybe not so much in Japan, but in Africa, Latin America, and Asia, having a dollar account is a great way of having flexibility and with your money. So that's why we merge those two things together, because it gives the customer the maximum amount of options of what they want to do with their money. It becomes about as borderless a bank as you can design and build from scratch.
That's literally was one of Satoshi's visions. Anyways, exactly what you just said. So thank you for helping to grow that. Seamus, thank you so much for coming on the show today. I really appreciate it.
Thank you very much. Thanks for your time, Charlie.
And that is a wrap for this episode of the Charlie Shrem Show. If you guys loved it, please leave us a review, subscribe, share it. A big thank you to Josef from Pawn, Josh Garcia from Ketsal, and Seamus from Xapo Bank for joining us today for their insights on the current landscape. There's no doubt that we're living through some super challenging and exciting times in the world of Bitcoin and crypto finance. And I hope today's conversations illuminated the landscape a bit more for all of us. Remember, these discussions are not just for your passive consumption. We want you to engage. We want you to question. We want you to understand the world that we are shaping. So keep the conversation going online. Visit us on untoldstories.com. Hear more about the guests and the groundbreaking work. Don't forget to subscribe to the show so you never miss an episode. We're bringing you these shows for the past 4 years. We've had everyone, almost every founder of any blockchain, any crypto, any token has been on this show before. Just go to untoldstories.com where you can listen to all the past episodes. I'm Charlie Shrem. You can email me. My email address is right on the website there. And I'll see you next time for another deep dive.